Hey guys, welcome back to Snowball Investing. This is going to be the February 2025 portfolio update. We finally had some volatility in the market. 2024 was an amazing year, so was the beginning of 2025, but everything doesn't keep going up forever, but that presents some opportunities. So what I do in this video is walk you through my entire investment portfolio, what I've been thinking, what I've been buying, what I've been selling, and I'll just be transparent with everything that I'm doing. Taking a look at the S&P 500, we were sort of trending on all-time highs, and since the 19th of February, we've had a bit of a pullback. It was down 4.6 at one point, but we made a slight recovery. But generally speaking, there is a bit of fear in the market, which is, I think, quite healthy. We have been going up fairly consistently. I mean, looking at the past year, we're up 1.46%. And the past year, we're up, 15.91%. So I think some corrections in the market are healthy, and it brings opportunity. It allows us to buy stocks at greater prices. So I welcome this correction, and I've also started to buy a bit more stocks across my portfolio. As we always do, let's start off with my personal pension. If you've not seen these videos before, what I do is I have a workplace pension. It's actually a salary sacrifice scheme. So I put in 12% of my salary, and the employer matches that contribution. So I'm putting a quite significant amount in my pension every single month. So last month my pension was 153,000, and it still is this month, and that's mainly due to that large contribution I've made. And I've got a total unrealized gains on my pension of £45,899. The pension is probably my most tax efficient wrapper, especially for a higher rate taxpayer, because you get that 40% tax relief. So I'm going to continue matching my employer's 12% contribution for probably the foreseeable future. When I start seeing my pension rise to the value where I'm reaching that tax-free cash limit, I may reconsider pulling back a bit. But at the minute, I'm just trying to pump as much money as I can into my pension. As part of these updates, I also include my spouse's investments, because I like to look at the entire picture across both our portfolios, and then we can readjust and balance as we see fit. The other benefit is we can share allowances. So for example, if I've hit my £20,000 ISA limit, I can still utilize my spouse's £20,000 limit. So you've got a total of £40,000 for your ISA. So taking a look at my spouse's pension, her one hasn't pretty much moved either across the past month, I guess, which is good given the dip in the market. She's got an unrealized gain of £2,851 across her pensions. And, since we got married, we kind of reevaluated her pension. We got her away from her default fund, which just wasn't appropriate. It had way too much in bonds and non-equities. And now we are slowly building up her pension as well. So yeah, this is getting along quite nicely. Next up, we have the free trade ISA. So interestingly, this went from 253,000 to 250. So that's a minus 1% change in the past month. And I've got a total of £171,697 of unrealized gains in this ISA. And just to give you guys a quick glimpse of my ISA, if you haven't seen it before, and I've got a totally different video series on this, so please check that out in my channel. But in this ISA, I've got a mixture of stocks. So I've got some very riskier, high volatility stocks like Palantir and Rocket Lab, which have done extraordinarily well. I've got a bit of the index fund, and I've got some sort of safer plays like Alphabet and Meta and PayPal. So it's a real mix of stocks in this ISA. One of the problems of having quite a large volatile stock like Palantir as your biggest position is it can go up quite a bit, but it can also go back down. I mean, like Palantir was performing exceptionally well. I think it went up to the $120 range. So at the beginning of the month, it was 257,000. And my portfolio peaked at 327,000, and since then it's pretty much down 23% in just a matter of weeks, so down £77,000. And everybody must be thinking I must have been out of my mind, I was panicking, but actually that's not the case. With my current position in Palantir, I've pretty much sold my initial investment, so everything in there at the minute is just pure profit. And when you're buying individual stocks, you have to have high conviction in them, and that's just my opinion. Not financial advice here, but for me, a lot of these companies are 5, 10, 15-year holds. So volatility in the market, I can handle. I have no issues sleeping at night. But in the back of my mind, I know these are 10 years investments, and I'm terrible at time in the market. So, I expected a pullback. A lot of these stocks are running quite richly, so a pullback's healthy. So that's okay. But that just means I get to buy stocks at greater prices. So I think it's a mind shift for me that I've learned over the couple of years I've been investing, and something that really helps me out. The plan for my ISA is to max it out, and I've pretty much maxed out. I think I've got a couple of grand left, but I'll top that up before the end of the financial year, and hopefully next financial year I can still max out that £20,000 limit. Next up, we have my spouse's ISA with Vanguard. So last month that was 23,200, and it's come down a bit to 22,600. So that's about a 3% difference. And she has an unrealized gain of £2,595. She has stopped contributing to this one, so this is just going to sit there. And instead, she has now opened up a trading 212 ISA, which I'll talk about next. So looking at her trading 212 ISA, that went from 6,820, and that went all the way up to 10,603. So that's a 36% increase, and a total unrealized gain of £103. If you've been keeping track of my past couple of videos, you know I sold out my Vanguard GIA and a couple of stocks in my free trade GIA, and I've now invested that into her trading 212 ISA, and that's how you can kind of utilize each other's accounts to minimize tax. So I'm going to utilize my capital gains tax, but then reinvest that in her trading 212 ISA, so that cash and those investments can go tax free. We do hope to max out this ISA this financial year. I do have the cash from the selling the stocks in the other accounts, but we have other expenses that we want to spend it on. So I'm still undecided how much more to put in here, but it's nice to know I have that capacity, and I can always utilize both for our ISAs next financial year. So that could be another 40,000 if I have that cash lying around. Next up, we have the free trade GIA. So that went from 22,408 to 18,384, so down 22%, and unrealized gains of £8,363. As I mentioned, I did sell some stocks to utilize that capital gains tax limit, and some of those stocks were kind of low conviction stocks anyway, so I did want to get rid of them, and it was just the right time. So I won't be adding more to any of my GIA accounts. So my plan is probably next financial year to sell another bunch of stocks to utilize that limit, but eventually I'm going to move away from my GIAs into the ISAs or pensions, so I'm using more tax efficient wrappers for my investments. So moving down to my work shares, this is one of the only investments that actually went up. So it went from 20,309 to 23,448. That's up 13%, and unrealized gains of 13,613. And these are shares I get at discounted prices as an employee, and luckily the organization performing very, very well. So yeah, it's nice that I had a big bump up, but not planning to sell anytime soon. Last but not least, we have the crypto portfolio, which is made up of pretty much nearly all Bitcoin. So that went from 17,400 to about 13,700. That's around a 27% drop. And the total unrealized gains of this is at 9,587. Obviously, crypto is a much more volatile asset, so this was to be expected. So the S&P 500 goes down a couple of percent, you can expect crypto to get hit much harder, but that's okay because I've got my allocation. It's a very long-term punt for me, so if it goes down a fair bit or if it goes up, it's more of my speculation play. So looking at the total of our investments, it's gone from 517,000 to 512, so just down 1%, which given the market volatility, you can argue is not too bad. And the unrealized gains sit at a total of £254,708. So what's my thoughts in the market if we continue to get a downturn? If anything, I welcome it. So looking across my portfolio, many of these are just set and forget. So the pensions, they're both money just going out the door before we even see it in the paycheck. So if it goes up, if it goes down, just going to continue to pound cost average into those. So if anything, buying those at much cheaper prices now is going to pay dividends down the line when I retire. My accounts such as Free Trade and the Trading 212 ISA, I do have a big lump sum of cash that I've been building up. So in the past 3 or 4 months, I thought the market was quite overstretched. So I'm now sitting on around £30,000 worth of cash. So I've definitely started to nibble now. So buying stocks like Venture Global, like Google, a bit more index fund than the Trading 212 ISA. So I've started to nibble. And if we get even more downturn in the market, I'm just going to continue to buy more heavily. So if anything, I welcome a market correction. So this is going to conclude it for this month's update. If you haven't, like and subscribe, and I'll catch you in the next month's video update.